Hello guys and welcome back to the new video of Nova Forex. So, in this video we would explain you about the support and resistance zones in deep, and after learning it, we would share the highly effective support and resistance zone strategy which would help you in maximizing your profits into the market. But before we move on into the video, if this is what that interests you, then don't forget to like the video and make sure that you subscribe to our channel and hit this bell icon to never miss out any of our upcoming videos. With that being said, let us now start the video. Let us learn about the basics of the support and resistance zones so that you can understand it properly and can apply it in your trading plan. The support zone is a zone where buyers are more attracted as they believe that the price is cheaper at this point. Due to this, there are a lot of buying orders being rested at the support zone, which makes it a key level. The support zone is not a one-time use zone, as the market may respect this zone into the future. Let us see how it can be used into the future. So, here we have the gold chart on 15-minute time frame. The market is seen going above from this zone multiple times. And this is why there would be a lot of buying orders being rested here. There are generally two reasons behind a support zone being formed. The first reason is that the smart money, which means central banks and institutions, wants to gather the counter orders from the market participants like small banks and retail traders. In such case, the market would go below the support zone. And a demand zone would be formed below the support zone at which the big money has their buy orders being rested. And once the price reaches at this demand zone, the price would shoot up as there are big orders being rested here. Here is an example of the first reason being happening into the market. So, here we have an uptrend due to market forming higher highs and higher lows. And then, we see market going into the consolidation phase. The price is already in an uptrend, and if the smart money wants to buy the currency pair in the market, then they would need sellers who can sell their shares to them. The support zone is formed here because the market moved to upside after reaching at this zone multiple times. And this indicates that there is a lot of buy orders being rested at this support zone. Now the smart money would start to manipulate the price by bringing it to downside at this demand zone. The market reached at the demand zone and then it started going above. This move by the market removed the early buyers who had set their buy limit order at this support zone. If you have missed to enter into this bullish move, then don't worry, the market would give you another chance to enter at this support zone. The market first went above and then it came back to this support zone for the retest. This is also a nice key level for entering into the market. This is why we recommend you to not enter at any point into the market, even if it is a key level, until it gives you a confirmation. Like in this case, the market was making red candles at the support zone. At this point, we would not go long even after knowing that it is a key level. And instead, we would wait for the market to show some bullishness by making some green candles. But it didn't do so, and thus, we were saved from getting into this liquidity trap of smart money. The second reason behind the support zone being formed is to make a fake breakout. So, a breakout means that the market has not respected a key level which was respected before by the market. And this is also a way to accumulate counter orders from the market participants. Let us see an example of it. The market is making higher highs and higher lows, which indicate that the market is in an uptrend. And then, the market goes into the consolidation phase and makes a support zone. This can be said a support zone because it was respected by the market multiple times. And there would be heavy buying orders being rested here. But although this key level had heavy buying orders rested, the market went below this level. Now here is an important thing that you should know. The market has not given a proper closing below this level. Only the wicks of the candles went below this key level. The market suddenly made a big bullish move. And due to this, we can say that this was a liquidity grab. The second reason looks same like the first reason, but it is not fully same. So, here the smart money had their buy limit orders rested at this support zone, but due to their large quantity of buy orders, they need a large quantity of sell orders. But the market participants would not sell the currency pairs at this support zone, as the market has respected this zone for multiple times, and thus, there are higher chances of market respecting this zone this time also. So, in order to gather the counter orders, which is the sell orders in this case, the smart money has to remove the buyers from the market so that their buy orders become sell orders. And that is why the smart money would bring the price below this support zone, but it would not give a strong close below this zone, which is a sign of liquidity grab occurring into the market. And then, the price shoots up due to heavy buying orders of the smart money at this zone. For this reason, we recommend you placing your stop loss below this zone, which would help you in earning nice profits out of the market into the winning trades like in this example. Same thing happens into the resistance zone. Let us see an example of it forming into the market. So, here we have the pound-yen chart on 1 hour time frame. The market is currently in a downtrend as it is making lower highs and lower lows. And after that, the market is seen getting rejection from this zone multiple times. And thus, we can say that this is a resistance zone. The market is seen again coming to this resistance zone. By seeing this rejection of market at this zone, we can conclude that there are a lot of sell orders pending at this resistance zone. Let us see how the market reacts to this zone now. So, as you can see that the market went a little above the zone, but it didn't give a proper close above this zone. This move by the market removed the early sellers whose stop loss was at this upper end of this zone. And then, the market dropped quickly. And thus, we can say that this was a liquidity grab and not a breakout. Now that we have learnt about the basics of the support and resistance zones, let us now learn about the strategy of the support and resistance zones, which would help you in earning nice profits from the market. So in this strategy, we would use the top-down analysis, as this analysis helps us in knowing the overall trend of the market, which would save us from initiating counter orders into the market. A lot of traders blow their accounts due to this problem of using only one time frame to trade also. This is why we recommend you to use at least 2 time frames or more in order to initiate buy or sell trades at correct time into the market. So, in this strategy we would mark higher time frame support and resistance zones into our chart, and then when the market continues its trend, we would use these zones to initiate our trades into the market. When a support zone becomes a resistance zone into the market, we can say that it is a swap zone. It is a swap zone because it has changed its function from providing support to resistance. The swap zone is a key level which is more respected by the market. First, the support zone or resistance zone is created to accumulate the counter orders, and then, once this zone is swept, the price again comes at this zone to retest. And during the retest, we would enter into the market. Let us learn this strategy properly through an example. So, here we have the euro-pound chart on daily time frame. We can see market creating lower highs and lower lows, which signals of market being in a downtrend. And then we see market respecting this zone multiple times, which confirms of this being a support zone. Now the price has again came at this zone. And then, the market went below this support zone, which removed the buyers who had set their buy limit order at this zone. And thus, we would find key levels at which we can go short into the market. This swap zone has higher chances of being respected because the market has also formed a fair value gap here. The market is making a pullback, and now let us wait and see the reaction of the market when it reaches at this key level. The market is showing weakness at this key level. Now we would move to the lower time frame, which is 4-hour time frame. The market is showing some bearishness at this 4-hour time frame, which confirms of market reversing from this point. We would go short from this price point. The stop loss would remain, as we said previously, into the market above this support zone. And the target would be at 4 times the stop loss. The market continued to go downwards, which made us earn nice profits from the market. This is where we end this video. In this video, we shared the highly effective support and resistance zone strategy, but we recommend you to backtest it before using it out. And also, if you liked our strategy, then you must like the video and be sure to subscribe our channel and hit this bell icon, which would help you in not missing out any of our upcoming videos.